As always, I'd like to welcome everyone to our lesson today. We are now ready for lesson number 5. As usual, please take a couple of moments just to read the disclaimer and get acquainted with the content of it. Now, for our agenda for today's lesson, we've got 3 key areas that we're going to tackle together. First, we're going to review perhaps one of the most important concepts in technical analysis, support and resistance, and we are going to look at how it can also benefit us tremendously in working with the profile. As you remember, when we first started the course, I told you that in order to be able to utilize the full power of the profile, we cannot abandon the key concepts in technical analysis. On the contrary, that we had to be able to integrate what we learn about the profile or from the profile with what we already know or what we can also derive from technical analysis. After discussing support and resistance for a little bit, we will get into the profile reference lines, and then we will have a brief discussion together on the dynamics of the open when the market first opens in the morning. All right, let's begin by tackling the topic of support and resistance. First of all, let's begin with a definition for each. So we'll start talking about support first. And a support level is a price area where demand or buying is strong enough to overcome the selling pressure in the market at this or at a specific point in time. In other words, support does not always hold forever, and support can occur at different time frames. So we may have a support level at a 15-minute time frame that may not exist on a day time frame. And so time and the level of support are very important, and we have to always analyze in the context of the time frame that we are looking at. Now, to be able to identify support and resistance levels, I have a very simple diagram drawn here. The diagram really represents price movement for a period in time. It starts at A, or point A, and concludes with point B. Now, price rarely moves in a straight line for a very long period of time. So we find that it will zigzag, as you can see here on this diagram. It moves up and then drops a little bit, moves back up and then drops again, then moves back up again. Now, given this pattern, this is how we identify where our support levels are. We take a look at where the pivots are, and the deflection or inflection points define our pivots for us. So this would be the first support level on this price movement that I have drawn for you. They're very easy to identify, and there will be a price associated with this level. As the price continues to move higher, we're going to find another support level. And this is the second support level that we have for this particular brief movement. And as the movement continues, we are going to find that we're even going to have a third support level. So each of these pivots defines for us a support level. And again, what really happened at this support level, prices started to drop in the auction, and then what happened is it found sellers. It found buyers. So price was selling, and as soon as it found buyers, it found a support level and immediately started back up, heading back up in the original direction of the movement. Remember, to review again, one of the key principles of an auction market An auction market is always looking for the opposite of what it finds. So in this case, prices directionally were moving up, and they were looking for the opposite of what they find. So here they found sellers, and what happened is this is the opposite of what they're looking for. So all of a sudden, the market started to drop, and we began a down auction. But the down auction did not last very long. As soon as it found buyers, it took prices higher again. So a support level is really a level where buying is going to overcome the selling pressure that exists in the market. All right, now a definition for resistance. And resistance and support are often interchangeable, as we will see in a moment. But when we think of resistance, a resistance level is simply a price area where supply or selling is strong enough to overcome the buying pressure in the market, again, at a specific point in time. Always remember the specific point in time, because these support and resistance levels are not the same on different time frames. So once again, let's take a look at this brief price movement that we've drawn. We're moving up, and then all of a sudden, we meet sellers. Sellers define the resistance for us. So since now we've found sellers, what's going to happen? Prices are going to start to drop. And the auction drops until it meets support or buyers. The buyers bring it back up again, and sure enough, after it navigates up a little bit more, it meets sellers again. And prices are always moving through this cycle on any and every time frame. They move up, and then they come back down. That's the nature of the auction market. There are a variety of reasons as to why this is happening. Part of it is, of course, the auction market movement. Another part is just the simple dynamic of what's happening in the market, the behavior of buyers and sellers. If someone bought here, they may decide that this is a good point for them to get out of the market and capture this profit. So they start selling at this point. And in doing so, they probably attract a little bit more selling, and prices starts to drop until all of a sudden a group of buyers determines that this is a good point to buy. They start buying here and once again take the price higher. And the same dynamic happens again. Buyers that bought at point 1 decide that it may be time to sell at point 2 and capture this profit, and in doing so, again, prices will start to drop. And the cycle continues. So we have 3 levels of resistance here that we encounter. 2, 3, right there. And as the movement continues, we're likely to meet more and more resistance levels at different points. The key part of our discussion here is to understand that you are always going to encounter support and resistance levels in the market. The other important thing to understand is support levels are always very good points to buy, and resistance levels are good points to sell. All right. The support and resistance points also play another important role that we need to highlight, and that is they identify for us a trend. And we will quickly review together the definition of an uptrend and a downtrend. An uptrend is a series of higher highs and higher lows. And a downtrend is simply the opposite. It is a series of lower highs and lower lows in a specific price movement. So again, definition of a trend. If we have an uptrend, you're going to see on your chart, and in this case we're not looking at profile charts, we're looking either at a bar chart, line diagram, or a candle chart, you're going to see higher highs and higher lows. The way that we see this on a profile chart, would be by looking at the TPOs. We're going to have a higher high for each TPO period and a higher low, and that will identify for us an uptrend. And for the downtrend, same thing. On a TPO on the profile chart, you're going to see lower highs and lower lows. You will also see these same pivots if you look at a bar diagram, a candlestick diagram, or a any type of bar chart. All right, let's take a look at just a simple diagram here, a line diagram. And early on, I told you that each type of charting technique has its useful advantages. And now we're going to see one of the advantages that the line diagram can help us. And it really helps us to clearly see, one, support and resistance points, and two, trend direction. In this case, take a look here. We have a low and we have a high. Now, we have a higher low. So we started out with this low. Now we have a higher low, and we also have a high here and a higher high here. And the point that I'm getting at is, look at how easy it is to spot a trend. Naturally, this is an uptrend because we've got higher highs and higher lows. Right. See, the uptrend becomes very obvious. And once again, you can easily spot this on any time frame chart. The definition does not change with the change in time frame. An uptrend, higher highs, and higher lows. Very simple. Now let's take a look at a downtrend, which was the exact opposite. We begin with a high here in this area and a low. Now let's take a look at the sequence of what happens to our highs and lows on this diagram. First high here, next high here. What's happening? Lower highs. Look again. We had a low here and a lower low here. Lower lows, lower highs. Naturally, this is the textbook definition of a downtrend. So notice how lower lows and higher or lower highs. Now, what's interesting is take a look at when the trend is broken or when the trend changes. Notice here this high relative to this high here. For the first time, the trend is changing. The high now is actually higher than the prior high. So now things are starting to change. And look here, the low, from this low to this low, we have a higher low. And sure enough, look at what happens when this change occurs. The direction of price completely changes. So the definition of the downtrend was violated. We now started to get a higher high rather than a lower high, and we got a higher low rather than a lower low, and therefore we now know that that downtrend will no longer continue, and we are likely to see the beginnings of an uptrend. Sometimes you have to be careful, though. This can be a little bit deceiving, because rather than continuing to move up, what might often happen is you will see prices move sideways for a while, and then they might start to drop again. So don't get terribly carried away. If you start to see some higher highs after a downtrend, it may signal a change, and it may also mean that we might be in a consolidation for a period of time, and the trend will continue after that. All right. In general terms, if we're going to try to identify support and resistance levels, we're going to look for them in a variety of ways. And it's very important for you to be familiar with all of these different ways to identify points of support and resistance. And we've already mentioned why that is the case, because points of support are great levels to buy at, and points of resistance are good points to sell at. They also help us in the anatomy of a trade. Quite often, I may decide to sell before I get to resistance. So they help me identify my targets for my trades. Sources of support and resistance. First and foremost, past behavior of the instrument. You will be amazed how any financial instrument has a very long-term memory. It does not forget what it did at certain or specific price levels. So quite often, we find ourselves looking back in time to identify support and resistance levels. Another thing that we need to be familiar with when we talk about support and resistance is the concept of role reversal. What was once support often becomes resistance if prices are approaching it from a different direction. And the same thing, what was once resistance often becomes support as prices approach it from the opposite direction. And I will give you some examples of these. Now, another source of support and resistance, but this one is more for the daytime or the day frame time frame trader, the daily pivots. And I'll talk a little bit more about those. Another frequently used technique, which I won't cover in much detail in this session, Fibonacci lines. They often also provide us with support and resistance levels. Another very important source of support and resistance are trend lines, and I'll talk a little bit about those. And the reference lines on our profile chart also are incredibly significant for support levels during the day time frame trading. The other source is also moving averages. You have to keep that in mind. So you see, we've got a blend of different techniques here. Some of them come from the traditional world of technical analysis, and some of the others, actually, you will see, are derived from the profile. The profile reference lines and points of support and resistance are incredibly powerful for daytime trading. Some of the others, though, may be more important or more relevant when we're looking at longer time frames beyond the framework of just a single day. Once again, I pull up a simple line diagram, and the reason I like those when it comes to support and resistance is because they're all based on the close, so it's very easy for me to identify key levels by immediately looking at the chart. If you have a candle or a bar chart, it can be done, but it's not as clear or as easy as you will see right now when we begin to draw our support and resistance lines right on top of these peaks and valleys on the line diagram. This is a recent chart for the ES Mini, and I wanted to begin by drawing the closest support level on the daily chart based on where prices are right now. And today, this morning, we're trading at about 1288.25, and the first major support level, if in fact prices start to drop, that's going to have to be tested, is right at 1280. And you can see how I arrived at this quite easily from my line diagram. You see this little pivot here as prices were going up. They dropped for a little bit and they found support and then continued their trend upwards. Now, if in fact they manage to pierce through the 1280 level, well, where's my next support level down? The second support level that we've identified is this peak that you see here. And once again, see how visually it's really easy to identify those using a line diagram. It makes it very simple. And sure enough, the third support level, right here at this point, again, at this pivot. So now I have my three key support levels on the daily chart, if prices start to change direction on me and we start to drop in prices, I know where my support levels are going to be. And so I have to be especially attentive at these levels to see how the market will react. This is the same line diagram that we were looking at, but a magnified view of the period where we have drawn our support levels. So you can see clearly where the support is. The very first one that we identified was the 1280 level. The second support level that we identified was this level. Now notice, this is one of those levels where at one point it was in fact resistance. As prices were coming up, it met 1273 and caused it to drop. But then they came back up again. So what was once resistance is now going to be a support level for us as prices decide to come back down. So 1273 would be my next support level down. And as we continue on lower, 1265 is the number that we would be looking at. And 1256.50 is the next level after that right here. It really is not that hard to be able to identify these from a line diagram, and I will give you an assignment a little bit later in the lesson today to do that for the ES Mini for a specific period of time, just to practice in using the line diagram to determine support and resistance levels. All right. Now I'm going to switch gears a little bit, and I'm going to take you away from the daily line diagram, and I've gone to a weekly diagram. And the reason I've done that is I want you to recognize that the support and resistance levels that we get from higher time frames are far more potent than the shorter time frames. So I began with a day, and now I'm moving up to a week. If you had a line diagram for a 5-minute chart, you're also going to find some support and resistance lines on the 5-minute chart. Those levels are nowhere near as significant as the ones you are able to identify on the daily chart, and certainly nowhere as powerful as the ones that we're going to identify now on a weekly and on a monthly chart. So a key and important point to be aware of is the fact that as we move up with the higher time frame, the support and resistance lines that we draw become more meaningful and far more potent than the ones that we see on the shorter time frames. So this is why for the weekly support lines that I have drawn them a little bit thicker to emphasize their importance. Now, the first one is right here at this pivot point. So if we come down, I have the 4 that we have identified from our daily chart, and then the first major one that we're going to encounter is this peak here that was once a weekly resistance, but is now going to provide us with a weekly support level. And similarly, the next one that we need to be on the lookout for would be this peak over here. And these levels are 1221 and 1202. An important point that I also want to emphasize, even though we are able to pinpoint and identify a specific price value, I always want you to think of support and resistance as zones, not necessarily just a specific or a single number. So you want to look at what's happening to price as it approaches that zone of support or resistance. And by zone, I mean the price around 1221. So it could be anywhere from 1220 to 1222. The area around that number gives us the zone of support. And certainly if I have two very close support lines, then these two become very potent and they clearly define the zone for me. So here I have between 1202 and 1221 as a rather key support level here, or a key zone that we really need to keep our eye on and see what happens if prices, in fact, make a turn and start dropping. The other key point that I want you to keep in mind, that very often when prices start to drop, they drop at a far more rapid rate than they do when they're rising. So if prices are in a downward trend or in a downward movement, you're going to see them pierce through support lines much faster than you will see prices pierce through resistance lines as prices are moving in an up direction. All right, now I've switched to an even higher time frame, and I'm looking at monthly line diagram. And notice here something very interesting. On the monthly diagram, I come up with the same numbers that we had on our weekly line diagram, which indicates that this level really is going to be a significant support level. We see it on the weekly line diagram, and we also see it once again on the monthly line diagram. So it is important whenever you're going to develop and draw your support and resistance lines to look at them in a number of different time frames and see if in fact you're going to find patterns that start to overlap between these time frames. And when they do, you should recognize that those are in fact going to be more significant than the other points that don't show on more than one time frame. All right. We talked about support and resistance, and I identified some of the support levels because prices may, and at some point they're going to in fact come back and test some of these support levels. But for resistance, if we are to look now at where we are at on the ES Mini and try to project where is the resistance that we're going to encounter in terms of the future, let's take a look at a monthly chart together here, again for the ES Mini. And you notice that the first resistance level that we're looking at is 1288. And interestingly enough, if you in fact have a chart open today, you are going to find that we are right at 1288. So after we finish our lesson today, I encourage you to open up your profile chart and take a look at what is going to happen at this level and watch the behavior of prices. It'll be very interesting to see whether it is going to pierce through this level. And you've identified already that 1288 is a significant level because it appears on the monthly chart as a resistance line. And the next level up where we need to be attentive is 1320 based on this point here. See, now I'm going to the past. What once was support at this point here, it becomes resistance for me as we head upwards with our price movement. So I have a somewhat of a resistance zone that we're heading into at this point from the monthly chart on the ES Mini, and it will be interesting to see what is going to happen. Are we in fact going to be able to pierce through this entire zone and continue to move up? Or is this going to prove to be a potent resistance level that will in fact push us back down to test our support levels? And if we test our support levels, how far down are we going to go, and which support levels will hold and which ones will not? So I always identify the support and resistance levels as important power lines. I talked to you about power lines, and we always want to take a look at the momentum of the movement and how able or how capable the movement can pierce through some of these power lines, whether the lines are above the price movement or below it. All right, so now looking at the chart a little bit further, but on a weekly chart this time, if we were in fact to go higher than 1320, 1419 would be a key level, and then we have another level here at about 1360. It is important for any instrument that you're going to trade to do this analysis for it before you even look at any chart and identify the support resistance levels for it for the area where the price is trading. So if we're trading in this region, this is where we want to study our support levels and resistance levels in the region where price is trading. Okay, the next area that we want to look at for support and resistance cues or points are trend lines. Once again, you are not going to see the trend lines on the profile chart, but you are going to see them on other types of charts. You're going to see them definitely on line diagrams. You're also going to see them on bar charts and candlestick charts. Trend lines are very simple. They're nothing more than straight lines that are drawn on a chart that show us the steepness of a trend or a move. And of course, I will show you some examples. Back again to my line diagram. They're great when it comes to trends and trend lines. And take a look at a simple trend line here. And basically, I take one peak and I connect it with another peak. So when I was here, the next peak would have been here. But at this point, if I connect this peak with this peak at the top, I come up with this trend line, and prices are heading towards that line. When my trend line intersects with a support or a resistance line, it adds to the significance of this point. So keep that in mind. This becomes even a more interesting or more of a challenge to see how prices will react when they get to that point. Now, notice how price reacts when it comes to meet this trend line. The more points that seem to touch it and the trend line holds, the more powerful that trend line. So we begin with 2 points, but the more the merrier along the way. The more points, the more potency it adds to the trend line. Now, as we connect the highs, it also makes sense to connect the lows. And if you notice here, we have a number of lows, and when we connect them, we come up with another trend line on the bottom side of the movement. What we call this is a price channel. Price is trapped between 2 trend lines, one at the top and one at the bottom. All right. So in a way, we have a channel that gives us support using the lower line and resistance at the top. So we watch price and see what happens. Now notice here, price pierced the lower trend line and then stopped at this point, started moving back up again. And when it met this old lower trend line, it deflected it a little bit again, but then it continued upwards. And notice when I told you that when prices meet a trend line and also a horizontal resistance line, that point becomes somewhat more potent. And here we see that this is right at about 1289.50. So I mentioned earlier that we were at 1288. I would certainly anticipate prices are going to move up to try to test this 1289.50 point. But it'll be interesting to see whether or not it holds. Now, you notice now that prices came out of this original channel, and in doing so, they actually created another bigger channel. So we have 3 lines, lower, a middle, and a top line. And they give us a wider channel for price to move in. There is actually a tool that you will find in your drawing tools based on this principle, because this movement happens very, very often, called Andrew's pitchfork. And basically, it tells us that price tends to move in a channel with an upper range and a lower range in the channel. And here, prices have dropped to the lower range of the channel, and they're coming back to test about the midpoint or the middle of the channel. And we'll see what happens, as we talked a little bit earlier, what happens as they test this resistance level from the trend line and the resistance level from the horizontal red resistance line that we see here. So we have an upper channel, in this case represented by this region, and we have a lower channel. And then, of course, we have the wide channel that encompasses the entire movement. Lower channel. All right. Now I want to move us into a shorter time frame, a shorter perspective. We're going to look at the key daily reference lines, or the key daily pivots. The floor trader pivots are very important numbers, and as a matter of fact, before the profile was ever developed, this was the method that floor traders and market makers used to establish value in the market. A lot of traders to this very day still use this method. Many of them may not necessarily be familiar with the profile, or just by force of habit, because this is what they've done for so many years, continue to use these floor trader pivots during the day. If you are not familiar with them, it is very important that you become familiar with them. They're really very simple. And on the market delta platform that we use, as with almost any platform, it is a simple indicator that you're going to find on the platform, and you simply give it an instruction at the beginning of the day to draw for you these floor trader pivot lines. These pivots are nothing more than calculated lines. It's a calculation, and I will show you how we calculate them. Basically, we begin with a pivot for the day, and the pivot is nothing more than just taking the high, the low, and the close of the prior day and dividing it by 3. And this is my starting point for my floor trader pivots. This is the number that I have to calculate all the other numbers that make up the pivots. So now that I have my initial pivot, and simply again, I'm just taking the high, the low, the close, adding them up and dividing by 3. So basically it's an average of the movement that happened during the day. High, low, plus close, divide by 3. And now for the other pivots, I want to define where my first resistance, second resistance levels would be, and where my first and second support levels would be. And the simple calculation is, for R1, which is my first resistance, I will multiply the pivot that I had by the number 2, and I'll subtract from it the low of the prior day. And once again, for the support level, 2 times the pivot minus the high. And then the calculation for resistance level 2 is simply the pivot minus support 1, which was this number that we just calculated here, plus R1, and so on. Very simple formula, just simple math, addition, subtraction, and division. You don't even have to do this anymore. I just show it to you so that you have an idea where the numbers come from. This will be done for you automatically simply by calling in the indicator. And the indicator shows us the lines right away. Here's the pivot for the day, the first support level, the second support level, the first resistance level, and the second resistance level. The way that floor traders use these lines is really very simple. If prices tend to move too far away from the pivot, they begin to realize that we're moving too far from the value area. So they always like to trade close to the pivot. If in fact prices start to deviate too far away from the pivot, what that's telling them is that we have a major buyer or a major long-term player in the market, and the prices are moving directionally now. So they then begin perhaps to take some trends in that direction, always keeping an eye on the second resistance level. And if you notice here, see how it did in fact provide quite a bit of resistance, and prices sort of stagnated below it, and then they started to pierce it at this point. So these pivots are vital for any daytime trader to be aware of, and at least at the start of the day, you should have them on the chart. Now, if I'm using a profile chart, it is very easy to get these numbers and put them in as reference lines on my profile to add them to the profile chart. So I can also see how price is behaving on the profile and relative to these floor trader pivots. And the reason that these floor trader pivots are important is because many floor traders do in fact continue to use them. So that's what gives them the significance. All right, now for our other important support and resistance lines that we're going to get from the profile, I call them the profile reference lines. And we'll begin with three basic categories that hopefully you're all familiar with now. The POC, the point of control, the initial balance lines, and this is the first two periods of trading in the day, the A and the B period, and the value area lines. These are all very important lines, as I will show you in a moment, in terms of support and resistance during the day. Take a look here at some profile charts, and we're simply just going to identify on these two profiles these reference lines that we discussed. And the first ones are the blue ones, and they are the initial balance lines. And always remember, there's a lower initial balance line and there's a high balance line. So when you look at prices, you want to ask, where are they relative to these initial balance lines? And once again, on the other day, it's exactly the same. We have two other initial balance lines. These are our first two reference lines that we always want to keep track of on our chart. And we compare between today's numbers and the prior days. And I'll show you in a moment how prices tend to behave when they encounter some of these points. The next, the value lines, and these are even more important than the initial value lines. There's a lower value line and a higher value line. The low value line and the high value line. Low value line and the high value line. If you take a look here on the chart, I don't want you to think that this is sort of something that was created by chance or accident. Notice how the two lower value lines of both days are very close to one another, because traders do look at these value lines and they do provide support and resistance, and therefore you will find that quite often they will in fact overlap. Now here, the upper value line dropped quite a bit from the prior day, so the value area really became smaller on the second day on this chart. Okay, we've got our value lines now defined. And the POCs, points of control. The point of control, again, is the point where we see the greatest trading activity. The largest number of TPOs that appear on the chart give us the POC. So really, if we're looking for the fairest price on the chart, in a sense, this is the price where the greatest activity between buyers and sellers took place. That's the POC. And so we have two POCs here, and the one on the left actually has more prints, so it would be identified as a more potent POC, but the other one is really not that far behind it. So what this is telling me is this is an area where really prices were accepted. And you notice also there's not that much of a gap between the two of them. All right. Let's begin then now that we've talked about some of these concepts and identified what they are. Let's really begin to apply some of these to trading activity. And one of the most challenging periods to trade is the open. And even though it is quite challenging, it can also be incredibly profitable. So let's take a look at the open and some key rules that I want you to follow if you're ever going to try to trade the open. First and foremost, you take a look at the price where the market opens. And you're going to ask yourself some very important and key questions. Is this price above or below the floor trader pivot? Remember the pivot that we just talked about and we looked at how to calculate? So this is the first question. Is the price above the pivot or below the pivot? Some floor traders actually follow a single rule. I'm not advocating that you do this, but just to show you the power of this pivot, that whenever price opens above the pivot, they immediately buy. And vice versa. If the price opens below the pivot, they immediately sell. I don't like these blanket and sort of general rules of thumb because I often find that they don't work as well as I like to see my trading work. So even though they may be successful at certain times and you may make some really big wins with them, statistically, if you look at them, they're not very sound techniques. So I like to look for more evidence. And the concept that I will always emphasize for you is the idea of confluence. You act like a detective and you want confluence. You want more than one thing to support your trading decision. So the next thing I want to look at for the open is the open price above or below the prior day's close and high. If in fact it's above the pivot and it's above the close and it's above the high, things are looking awfully bullish. So you need to keep that in mind. Now, another question I need to ask, where is the open relative to the prior day's value area? All right, the open now is well outside and above the value area. This would be another strong bullish indicator. The last but not least key question is, where is my next support or resistance level? If in fact I have a ways to move before the next key support or resistance level, then this may in fact be a great opportunity to buy and move with the movement. If in fact all these conditions are true and I'm coming up on a critical resistance level, then it may behoove me to keep my powder dry, to hold off and watch what happens at this resistance level. If in fact we're able to pierce through and move on, great, I'm with it. But I don't rush in simply because price now is at a point, it's above the pivot, it's above the close, it's above the high, above the value area, and then all of a sudden there's this brick wall that we're going to run into. So this is why it is very important before you take any trade to look ahead. Where's the target, and am I confronting any major level of support and resistance before I take this trade? Now let's put some of this conceptual thoughts or conceptual ideas into action a little bit on a profile chart and see how things sort of work out in the real world. I have before you here 3 different profiles. And each profile has on it our key reference lines that we have identified. So we have the initial value lines, we also have the value area lines, and of course we have the POCs. And I hope that everyone in the class at this point is able to immediately identify those. One of the reasons I always use the same colors for these lines is because visually it helps me identify them very quickly. And I would encourage you to do the same. If you don't like the colors that I use on my chart, pick your own colors. That's not the issue. But the issue is be consistent. Make sure you're always using the same exact colors for your value area, the same exact colors for your initial balance, and the same color for the POC. It will really help you immediately identify the elements on the chart. So just to do a quick review, my POCs are the red lines, my initial balance lines are the blue lines, and the value lines are the green lines. All right. We begin by looking at the prior day. So on this day, the first thing I'm looking at is my close. And now I move on to the next day, but I also wanted to identify the high before we go on to the next day. So I have the close and the high. Now we're ready for the next day. The value area. Okay, now we're ready for the next day. Three key things: high, close, and the value area. Now we open up here. Okay, see the open right here, that little O? And we begin to ask ourselves those same questions that we had on the prior slide. Are we above the close? And the answer is yes. Are we above the high? The answer is no. Are we above the value area? Well, not really. No, we're just below it. Remember what I told you, that even though we're above the close, we're meeting some resistance. Where's this resistance coming from? Well, this resistance is going to come, first of all, from the high of the prior day's value area. And sure enough, we weren't really able to move that far beyond it. Another point of resistance that I would have looked at is the high from the prior day. And we didn't even make it to that high. So look at what happened. Instead of being bullish because we were above the close of the prior day, prices actually started to move down. Now, as it moves down, where's the first support level that it's going to encounter? It's this POC. And look at what happens when it hits this POC. It just continues to drop even further and further. Okay, so now it's telling us that the support level didn't hold. What's the next support level? Well, it looks like it is the low of the initial, or the high of the prior day's initial value area. So it does in fact hold for period A, and we find that B opens up here, and it tries to move a little bit further up, can't make it, so it comes back to test support. And this time, the support that held for period A does not hold for period B and continues on to drop even more. This time, it even breaks the lower value area line and continues to drop further. But it stops at this point. And then we get C period, and the same process continues on as we're trying to define the value area on the profile. But you see how each of these levels gave us levels of support and resistance on the chart, and we had to track how price was reacting when it came to these levels. Now, at the end of the day, on this day, we had support at the day's low, meaning the day did not go any lower than this point. So now, the following day, the key question that we're going to look at on the following day when it opens is, where is price relative to this support level? And if you notice, we have this support. Now here's where we open the following day. We come back to test the support. And what happens? We don't even make it all the way down to the low of the prior day. So obviously, we have a long-time frame trader that saw this as an advantageous price and began buying at this level. So when that happens, prices started to move up. So they met with yesterday's low value area, pierced right through it, and then it came up to the POC. Now notice the POC halted period A, and then period B opened and then dropped back down. And this time, the second test of support, the support that managed to hold was the low of the prior day's value area. Since this low held, we didn't even have to come back to test the prior support. So it begins to tell us things are really bullish today. Somebody sees this as an advantageous price area, and every time price comes to it, they're buying. We have a strong support level. And notice for the C level, we can see that it got picked up immediately. When C opened here, it just dropped one print, and it was on its way up, all the way up. Now, we see support holding. The next challenge is, how is resistance going to impact us? Well, the B period was not able to pierce through this level of resistance that we had, the high of yesterday's value area. So it dropped. But look at what happened when C came back around and established that we had support here. When you have support, it gives the traders boldness to come back, challenge the resistance, and overtake it. And sure enough, we overtook C, and now look, period D never even came back down to test these old support levels. The support now was much higher. What used to be resistance is now my support. And D period came down to test this support and held, the support held, so we were off to the races, and we continued even higher with prices. And notice on this day, this is how the value area expanded quite a bit. And this is why the reference lines from the prior days are significant for us to pay attention to, because they influence our activity on the day that we are actually trading, or during the daytime frame. It is always important to take a look and see what happened on prior time frames. All right, so let's review what we just talked about. At the beginning of the day, we came up to test resistance. Since the support held, it was time to test resistance and look at this resistance level. And what happened was, when we in fact were able to hold our support, we got bold and we were able to take a look at D period. Continues. This is a split profile of the same profile we were looking at, just to show you how the periods started to continue to climb higher. And now we're not even coming back to test as far as they were testing before. So before we had to come back and test low levels. Now we were confident and we were moving from a higher support level, and we continued to move higher and higher with the move. So you see this 1282 level on the chart was my first key resistance level. And you see the number right here, 1282, and sure enough, it's the same exact number from the prior day. And it did in fact hold it back at period B, but it couldn't hold it at period C. Period C was able to overtake that resistance level fairly quickly, and you could also get a hint that this was going to happen when we in fact saw how well the support level held back here. Notice the reference lines. Notice how yesterday's low value held, and provided a support level. So this is why it is really important to be attentive to these values on your profile chart, the reference lines. Now, look at what happens when we break prior resistance. It becomes support for us. When the D period came down, it tested the support. It tested the support, which was prior resistance, and we were able to pierce it and move up with it. And here now, this support level provides us with our base or foundation and confidence to be able to move higher with price. All right. Higher support for period D. Periods B and C had to come back to this low level of support, but now we have a higher level. Prices now are comfortable to move on from this point on forwards rather than having to come back and test this. At some other point in time, they are going to come back and test these levels, but not at this point of time or not during that period. We always have to look things in the context of the time frame that we are working. All right, and the market continues to move higher as we described earlier.